We had some picture perfect scalps today, just like every other day. And if you listen carefully, you too can make money on a day-to-day basis consistently. I value your time as much as I do mine, so let's not waste any of it. I'll go over the current market's context, the best trades to have taken, including the one I took today, and my list of trading principles. Stay to the end to see how many Benjis I made today using these simple strategies, and let's jump right into the video. Let's take a look at the overall market context, right? If you guys weren't aware, if you guys weren't at the computer yesterday, we had a huge sell-off toward the end of the day yesterday. If you take a look at the daily, this candle right here, this candle right here, huge sell-off yesterday. In the macro, we're still uptrending, but it may be a sign of a minor pullback, in the near future. And then today, obviously today, this is Friday's candle. We're kind of bouncing from yesterday's sell-off. So that's the market context. If you look at the 5-minute at the SPY or the S&P 500 ETF, you can see the huge sell-off right here. And then in the pre-market, it kind of gives us a dead cat bounce. It's kind of trending back upward slowly in the pre-market. And if we take a look at the Qs, which is the Nasdaq ETF, once again we can see the huge sell-off and then the same pre-market uptrend that we saw on the SPY. So that's the overall market context in real time. And so you want to take note of what happened yesterday, the overall market sentiment. I'm not going over any economic news, but you want to take note of that. Take note of macro and micro trends, the key levels, and just get yourself prepared for your ultimate game plan and strategy as to how you're going to make money, right? So next, let's get into our trade to take. Every day, I aim to take one great trade in a particular stock, and I want to share some with you today. I never trade against my trading principles, which I'll go over after this section. And if you stay stoic and disciplined in looking for these setups and stay emotionally temperamented, you too should have made money just like I did today. Let's get into the stock SMCI. So let's start with SMCI. This is a trade that I've personally taken today. Yesterday I had the huge sell-off, and in the pre-market, it's kind of just giving us a dead cat bounce, slowly uptrending. And then if you take a look at the market open, the stock tried to push back up, and it was hugely pushed back down by sellers. And then it gives us a huge bearish momentum candle back to the downside below our key level. So we have our demand level, our demand zone right here at 950. So it breaks through that, and then it kind of pulls back, but reclaims that level. And so far our support level or demand level is holding up. And then for the next few minutes or so, next hour or so, we're kind of consolidating, chopping. But you can see that, we can make this trend line right here, right? And so I actually get in on the steeper trend line right here. And I've set a stop limit below the previous candle wick. And I wouldn't want the stock to go all the way back down to 950. I would kind of want it to go, a little bit, I'll set my stop a little bit above that. And so throughout the next few minutes, it hasn't really been pushing back up for me. It's kind of just been consolidating. So there's no reason to get out. My stop loss isn't hit, but at the same time, my target hasn't been hit. My main target was yesterday's, minor key level at 980. You can see that you can draw this out right here at 980. So 980 was my ultimate target. You can see that, the first 5-minute candle of the market open rejected that level. So I didn't want to take any risks, trying to, get greedy and look for more than that. So 980 was my key target, but I did want to lock in some profits on my first leg up, my first move up. You know that if you know my trading principles, on the first move up, I like to secure some profits just to make sure that I'm in a riskless trade, and that once it moves in my favor, it becomes a profitable one, no matter what. And so I get in for a good entry at this steeper trend line, but I noticed that after we consolidate for a little bit, I can make this, less angled trend line right here. And so Once it breaks out of that, if you didn't want to take the entry at the steeper trend line, you could have taken this entry right here where this yellow arrow is and set a tight stop loss under that candle or under the previous few candles. And then once we make that first leg up into the 972 area, you can take your first partial profit. And then once it gives us that huge move, simultaneously with the markets move upward towards 980, I took the rest of my position out and I netted $1,888 today. So that was my profit from this trade today. You can see that, we reclaimed this key level, and overall it's giving us a bullish sentiment. Why? Because you have to assess the price action. So what is price action? It's just analyzing the price, the stock's price and the candle bars, and you want to read it as clearly and rationally as possible. So once it reclaims that level, right, it never falls back below that. And you can see by these bullish wicks right here on the 5-minute that it wants to push back upward, right? So that's what's giving it a bullish sentiment. All of these bullish wicks right here, it's like, okay, the price wants to drive back upward. And so by me drawing this trend line, and once it breaks out of that, it gives us a high probability in which the stock will move in our favor, and we play according to that, right? Yeah, it's not 100% probability, but it's a high probability going up than down. And so you just want to stick to your strategy, stick to your stop limit. If it doesn't work out, you'll probably lose a couple of dollars. But if it goes in your favor, you'll make way more than, you risked, which is the whole point of trading. You want to risk as little as possible and make as much as possible. In this case, I've only risked, up to here, just a few dollars for essentially, $10 or $20. So it was a great risk to reward. And yeah, let's move on. Let's take a look at Nvidia once again. Later in the day yesterday, sold off in the pre-market, trended upward. And so you can draw this key level right here from yesterday's close at 860. And so what does it do in the first few minutes? It kind of sells off into that level, but doesn't break it. We see a huge bullish momentum candle as buyers drive, the price back up from that level, from that support demand zone. And then you don't want to get in right here because that's just a chase, right? And it's not giving us a real strategy or real incentive as to why it should continue moving up, right? We want to wait for the perfect setup. You have to be able to stay patient, stay disciplined, and not just chase things just because they're going up or down, right? Ideally, you like to see pullbacks. You like to look at price action, candle bar analysis. You like to have different areas of confluences that give you confidence in taking a trade. So with Nvidia, it kind of consolidates for the next few hours or so and gives us this nice trend line with multiple touch points. It's a trend line, it's a bull flag, there's multiple names for it, but with this many touch points and this clean of a trend line, it's a high probability setup. And so especially on the 5-minute, it's stronger than a 2-minute or 1-minute setup. And if you guys don't know, the higher the time frame, the stronger the particular setup or strategy is. So the 1 hour will be stronger than the 5-minute, and the 5-minute will be stronger than the 2-minute or 1-minute. And so once it breaks out of that trend line, you can get in for entry right here, set your stop limit, maybe below that candle or maybe below the previous few candles, and then look for the move upward, maybe towards the previous highs at around 876, and then maybe leave some few runners. Right when it makes the move in your favor, you want to set a trailing stop loss so that essentially the trade becomes risk-free, maybe around here. And unless it breaks your stop, you can ride the wave higher, ride the stock higher. Let's take a look at Tesla. Tesla sells off in the beginning. It reclaims the support level at 167. As buyers push it back up, you can see this bullish wick. You could take an entry right here if you're one of those people who like to take setups from, demand levels and price action. You could take an entry right there, but I don't like to really take those entries, especially in the first few minutes of the market open. So you wait for this consolidation and also this trend line that forms. And so once this breaks, you can take, an entry for going short, for a move going downward, setting a tight stop above these few candles around 170, 171. If the stock moves up, you're wrong, get out. In this case, it goes back to our support level. And so I will take partials out right here when we're approaching our support level, just in case you never know, if the stock might reverse back against you. So you take your first you take your first partials as it approaches your support level. But when it breaks that, you want to adjust your trailing stop loss to that level, to that support level, and you kind of want to ride it out. It gives us another huge move down, and I'll take the rest of my position off at 163, as it gives us that push down. And me personally, I would just take the rest out. What you can do is set another trailing stop loss, maybe above, this candle right here at 165, and kind of ride it out until it reverses against you. For me, when it gives me a huge move like that, I just take my profits. I'm happy with what I got. I'm a happy camper. But yeah, it all depends. It depends on, different personality traits that you may have. Sometimes I like to ride out my winners, but in this case, when it's a very steep move like that, I just like to take my profits and go on about my day. So that's Tesla. Let's take a look at the SPY, the S&P 500 ETF. Gives us a huge sell-off yesterday, trending back up. And then at the market open, it kind of consolidates and then reclaims its support level at 515, right? But we don't want to just get up, get in right there. We want to see some price action. We want to see a good setup. So we see it consolidating, but it's giving us a nice pullback entry in the trend line. And you can see once again with these bullish wicks, the price action is in our favor, indicating a bullish sentiment, a sentiment or mood that's favoring the upside, right? And so we get in at this trend line break. You set your stop loss, maybe at support or, a few cents above that. And on the first initial move up, you can take partials. And then on the next leg up, you take the rest of your position out, or, another few contracts out and set your trailing stop loss, maybe at 517, and then you can ride it out. So hopefully by looking at, these 4 stocks that I showed you and kind of my analysis and approach to how I trade using time-tested principles that are evergreen, they always work every single day, which is why I look for them every day. Hopefully you can kind of learn, look for yourself, back test it yourself. Don't trust anyone on the internet. Stay skeptical, do your own research. But from what I've seen, these work on a day-to-day. And yeah, let's get into our trading principles. The first one is no trading the market open. Wait at least 15 minutes or until 6:45 a.m. PST, which is California time. If you're on the East Coast, it will be 9:45 a.m. No trading till then. Why? Because you want to assess the market and get a good read of the market before you take any irrational or hasty trades. Number 2 is keep losses minimal. Set your risk limit when entering a trade and exit when your stop is hit. Risk limit, stop loss, all the same thing. Just know when you're going to exit a trade and when your trade thesis is invalidated. 3, map out key important levels and take note of the macro and micro trends. 4, analyze the stock's price action. The stock's price action is just what the candle bars are telling you, and if you don't know how to read candlesticks, let me know down in the comment. I may make a video on that for you. But what you want to essentially do is just analyze the price, analyze the candle bars at key levels, and try to see the overall sentiment, the overall trends, and look for a high probability setup in that manner. The next one is to look for clean, strong trend lines with multiple touch points, bull or bear flags, and pullback entries in trending stocks. avoid choppiness. So ideally, you want to stay in volatile, trending stocks and avoid any consolidation or choppiness unless you're on a trade in that kind of range, right? What makes a trend line strong is with the multiple touch points and especially on a higher time frame. So a trend line on the daily chart would be stronger than a trend line on a 1 hour chart, and that will be stronger than a trend line on the 5-minute or the 2-minute. Secure profits after the first leg. Ideally, this would be anywhere from 50 to 75% of your position size. You just want to do that to lock in some profits, lock in some gains, and make it a riskless trade after you secured your profits. Last but not least, leave runners at least anywhere from 25 to 50% of your position size and set a trailing stop loss. When the stock moves in your favor and you have some runners left, what you want to do is adjust your stop loss so that now you make it a riskless and profitable trade no matter what the stock does. That way, after you've locked in some profits, there's nothing that the stock can do for you to lose money on that trade. That wraps up today's video. Day trading using technical analysis, price action, and an adherence to my trading principles make me hundreds to thousands of dollars every weekday. Study and watch my other videos if you haven't, and make sure to like and subscribe. Wishing you much success, and I'll see you in the next video.